Hello and welcome everyone. Today we are going to understand a money market instrument known as tri-party repo. So tri-party repo is a money market instrument which was introduced by RBI in 2018, and this tri-party repo, when it was introduced in 2018, it took place of CBLO. Means CBLO, that stands for collateralized borrowing and lending obligation. Fine. So tri-party repo was introduced by the RBI in 2018, and it has replaced already established facility that is known as what? That is known as collateralized borrowing and lending obligation. Fine. So what is tri-party repo, how it works, and what is the purpose of introducing this? Let's understand. But before understanding this, let's briefly understand first what repo is. I hope most of you have an idea about the repo, but here I think I can bring some more interesting and knowledgeable source for you to understand repo in the more deeper way. Once you get the proper understanding, then I'll explain this one also. So this system of repo, which is basically means as repurchase obligation. Fine. It means repurchase obligation, and it was first time introduced in 1920 by US Federal Reserve. So US Federal Reserve have introduced repo, that is repurchase obligation, in 1920s. Fine. So what repurchase obligation means here? So basically repo is a secured method of lending and borrowing. Okay, it is a secured method of lending and borrowing. So what it means that, suppose that there is a borrower A and lender B. So A is a borrower and B is a lender. So A need 100 crores and B is ready, but B is asking for 7% interest on annual basis, and A agreed ki okay, I will pay you interest rate of how much? Interest rate of 7%, principal amount plus interest amount. That means if A will borrow 100 crore, then he have to repay 107 crore to whom? B. But B is little bit anxious of ki whether A will accept and will pay or not on the time and full amount. So B have said that ki okay, you will repay 107 crore, but I need some guarantee. Fine, I need some guarantee. So A said that ki I am giving you a government security, in short GSS, having the worth of 100 crores. Having the worth of 100 crore government security, I will give you. And both have agreed. Listen carefully here, what both have agreed. A said that ki I am selling this government security to you at what price? 100 crore. So if A will sell this government security to whom? B. Then B will give how much? 100 crore to whom? A. But A also have written an obligation ki I am selling this you to at 100 crore, but I am also promising ki I will repurchase it back by paying you how much? By paying you 107 crores. So in this lending and borrowing obligation, in this lending and borrowing operation, government security was sold by borrower, and with the obligation it is being repurchased by the borrower. So borrower will sell that government security and having an obligation of what? Repurchase it back once the tenure of this borrowing is going to be completed. So this sale of government security is happening with what? Repurchase obligation. In other words, the borrowing is happening by A from B under repurchase obligation, and that is why it is called repo operation. So what is repo operation? Repo operation is an operation where borrower agrees to repurchase the government security which he has sold to the lender on certain terms and conditions. Fine. So this is how this works, and here A is happy. Why? Because he have a guarantee of what? Government security, and everyone know that government securities are considered as a 100% secured instrument. Fine. And if you want to know more about the government security, what it is, how it works, just post a comment and I will make a detailed video on what is government security, how it works, different types of government security, dated security and other things. I will make a detailed video. But as of right now, we are going to do what? We are going to understand the tri-party repo, and in that context I have explained you repo when it was introduced. It was introduced by US Federal Reserve in 1920. Now, when repo was introduced in India and under what context? When it was introduced in India and under what context? So in 1988, Reserve Bank of India introduced market repo. What they have introduced? Market repo. Fine. They have introduced market repo, and under this market repo system, they have introduced the market repo, and under this market repo system, what they can do is, under the market repo system, RBI has allowed DFHI, that is discount and finance house of India Limited. This organization was also established in 1988. So this organization was established in 1988, fine, and under this organization, RBI allowed what? RBI allowed market repo. And this DFHI was having a joint ownership of RBI and different commercial banks at that point of time. And the purpose of DFHI was to develop money market. So to develop money market in India, DFHI was launched by RBI with the joint ownership of what? Joint ownership of commercial banks in India, especially public sector banks at that point of time. Okay, so under DFHI, fine, under DFHI, banks, two banks, for example, SBI and PNB, they can enter into repurchase obligation. They can enter, means suppose PNB is a borrower and SBI is a lender. So PNB can borrow money from SBI under repo system. And who is supervising this operation? DFHI. Discount and Finance House of India Limited was looking over these operations. Fine, DFHI. Alright. But what happened, if you remember that, in 1991, 1992, especially in 1992, a big scam was found in the securities market. Fine. and banks were also involved in that. Fine. And RBI, when investigated, have found that under DFHI, this repo operations are happening, but certain banks have created cartel. They have created a cartel, especially those banks who are always in a position to lend the money. They are in the position to lend the money. Have you seen that many times? What happened? You went to the auto stand and 3-4 auto rickshaw people were standing here, and you asked, I want to go to the railway station. Will you go? And he said, yes, but I will charge 150 rupees or 180 rupees, suppose that. But you said that, no, it is just only 80 rupees, 90 rupees, why you are charging 150? He said, no, if you want to go, you can pay this amount, otherwise I will not go. And when you went to the other auto rickshaw people who are standing nearby, they are also saying what? They are also saying 150 rupees, 180 rupees. So this is what example of what? Cartel. So cartel is a kind of a situation where the seller with having a close talk with the other sellers, and they will try to manipulate the price. So when sellers are having their understanding, and by their own understanding they fix the price in the market in order to exploit the market. Why? Because suppose that there are the 3-4 sellers, and these 3-4 sellers have fixed the price. You do not have any choice but to take the product from them. Then this situation is known as what? Cartelization of the market. Cartelization of the market. So RBI have found that in 1992, certain banks, especially those banks who are also having a capacity to lend, they also formed what? Cartel. Fine. For example, in that example, I have given the interest rate of how much? 7%. Fine. So suppose that there are 4 banks, L1, L2, L3 and L4, and they are in the capacity of what? Lend the money. And there are borrower banks, B1, B2, B3, B4, BN. So whenever they will reach to these banks, they may charge how much? 7%. But deliberately they are charging what? 9.5. To anyone you will go, they will charge what? 9.5. So when RBI found that this practice is getting normal, then in that condition, RBI have introduced RBI Repo. RBI Repo was introduced. Fine. Now what is RBI Repo? Under DFHI, banks B1 and B2 are involved in what? They are involved in lending and borrowing. Lending and borrowing. Fine. But when RBI have started Repo, now what will happen? In this Repo system, lending against government securities will be done by RBI itself. Means earlier there are the lender banks, but now who is a lender? RBI itself is a lender. So those banks who are interested to borrow the money, they need not to go to DFHI system under where there are certain banks who can lend the money. There is no need to go there. You can directly reach to where? RBI. And you have to sell that government security to RBI, borrow the money with the obligation कि I will repurchase this government security at the given date. So this is what RBI Repo, and it was introduced in 1992. And then in 1996, RBI have introduced reverse repo also. Reverse repo means if a bank have a surplus liquidity, If a bank have a surplus liquidity, they can give that surplus liquidity to whom? RBI, and get what? Government security. And RBI, under reverse repo, what will happen? Under reverse repo, RBI, banks. In repo, RBI and bank. Fine. So under repo, bank will give what? Bank will give government security, and RBI will give what? RBI will give money to whom? Bank. Now bank is have an obligation to what? To repurchase this government security to whom? From whom? RBI. And bank will give money to whom? RBI once this repurchase obligation is over. So at the time of lending, government security will move from bank to RBI, and money will move from where? RBI to bank. And once this tenure is completed, government security will repurchase by whom? Bank, and money will go with interest. With interest to whom? RBI. When it will be reversed, this time who? Money will go to whom? Money will go to RBI. And government security will go to whom? Government security will go to banks. Fine. Once this obligation is going to be completed, then the government security, then this government security which went to RBI, government security will go to back whom? RBI, and RBI will return the money with interest. So in this way, banks can earn interest by parking their liquidity and also get what? Government security. Fine. So this is repurchase. So reverse repurchase obligation, reverse repo, was introduced in 1996. Okay. So RBI have started repo operations in 1992, and they also started reverse repo operation in 1996. The purpose was to help banks in India to manage short-term liquidity. Why? Because in 1991, Government of India have introduced LPG reforms. Under LPG reforms, private sector was promoted, or economy was liberalized for the more participation of what? More participation of private sector. And private sector needs liquidity, though government sector also need liquidity. Government companies also need liquidity, but government companies are having the backing of whom? Government. So for them, managing the liquidity is not as difficult as for whom? Private sector. So private sector, for the purpose of managing their working capital, short-term capital requirement, they need money from what? Short-term purpose. So for working capital requirement, they can approach what? Banks. And it is an opportunity for the banks to earn what? Profits. So the demand of the liquidity for the short term was increasing. So why? You have liberalized the economy. Liberalization means more participation of private sector. More participation of private sector means more working capital requirement. So if more working capital requirement, the size of money market starts what? Expanding. And this is why, in order to help money market in the more better manner, RBI himself put in the money market by introducing the instrument known as what? Known as, that is, repo operation. But in this repo operation, only banks are allowed. So other instruments like mutual funds, insurance companies, and other financial organizations, they have asked RBI ki please allow us also to participate in what? Repo operations. For that purpose, RBI have introduced collateralized borrowing and lending obligation, CBLO. Collateralized borrowing and lending obligation. Here, under Clearing Corporation of India. Under Clearing Corporation of India, banks and all other financial institutions. All financial institutions in India registered with RBI can participate in what? Repo operation. Means on the name of government security, they can participate in what? They can participate in the collateralized borrowing by using what? By using government securities. Fine. Then in 2018, RBI introduced what? Tri-party repo. RBI introduced tri-party repo. So how tri-party repo works? Now understand. Borrower, lender. Fine. Borrower and lender. So there is an organization known as ARCL. ARCL. And what is this ARCL? This is Limited Purpose Clearing Corporation. Limited Purpose Clearing Corporation. So it's a limited purpose clearing corporation, and they are going to facilitate transaction of government securities between borrower and lender. Generally, what happens in the repo? Government security, bank is going to give whom? In RBI repo. If it is run by whom? RBI repo, what we called repo in general. Under this, RBI is there and bank is there. So bank is going to give this government security to whom? Government security to RBI, and RBI will give the money. Later on, bank will repurchase this government security and return the money to RBI with interest. But in tri-party repo, borrower bank is going to give government security to whom? ARCL, and then ARCL will direct lender. Borrower have to give the government security to whom? ARCL. So ARCL, once it is going to receive this government security from borrower, it will direct lender to give the money to whom? Money to borrower. Fine. So lender has given money to whom? Borrower. Once the maturity is going to be completed, the tenure of lending is going to be completed, then again ARCL is going to direct borrower to repay money plus interest to whom? Lender. And lender, once he is going to return the money to whom? Borrower. ARCL will return what? ARCL will return this government security back to whom? Back to borrower. And if borrower will fail to repay on time, then ARCL is going to sell that government security and give money to whom? Lender. So here ARCL or AMC, Repo Clearing Corporation Limited, it is going to work as a custodian. Fine, it is going to work as a custodian, ensures that this transaction of lending and borrowing should happen on a smooth basis. Actually, this is the work of clearing corporations. Fine, clearing corporation. So when we say the word clearing corporation, so the clearing corporation, what is the job of the clearing corporation? So the job of clearing corporation is to make sure that whatever the transactions are happening, that should be obliged properly without any fail. And if there is a failure, then certain measures have to be taken by what? That organization. Fine. So what happened in 2018? In 2018, RBI and SEBI, they have held a discussion, and under that discussion, SEBI have allowed Bombay Stock Exchange and National Stock Exchange to participate in what? Tri-party repo. Fine. So SEBI have allowed BSE and NSE to participate in what? Tri-party repo as a ARCL. So ARCL, AMC, Repo Clearing Corporation. AMC, Repo Clearing Corporation. And these ARCLs are what? They are limited purpose clearing corporation. So how this tri-party repo works? Borrower, lender, limited purpose clearing corporation. So borrower is going to give what? Borrower is going to give its government security to whom? Limited purpose clearing corporation. Fine, limited purpose clearing corporation. And then once it is received by LPCC, borrower have given the government security to LPCC, then lender will give what? Lender give money to the borrower. And once the term is completed, then LPCC will direct borrower to repay the money with interest. Fine. Then this government security will return to whom? Borrower. And this limited purpose clearing corporation is called as ARCL. And who is allowed to function as an ARCL? That is Bombay Stock Exchange and National Stock Exchange. Fine. National Stock Exchange and Bombay Stock Exchange. So SEBI have allowed these two, and the license was given by RBI to National Stock Exchange and Bombay Stock Exchange to work as a what? ARCL. So Bombay Stock Exchange and National Stock Exchange, these are the stock exchange which allow and facilitate trading of stocks and bonds, equities and shares. Fine, equity, shares, bonds, they are being transacted. Under the discussion between RBI and SEBI, first of all, SEBI have allowed these two organizations to participate in what? Tri-party repo. Then it is RBI who have given a license to both of them to perform a role of what? Limited purpose clearing corporation. And this limited person clearing corporation, this is known as ARCL, that is AMC Clearing Corporation Limited. Those who are having the doubt in the mind ki what is AMC means here, that is Assets Management Company. Fine. So this is how this tri-party repo works. In normal repo, there is a lender and borrower, but in the tri-party repo, there is a custodian who is going to direct the both parties, lender and borrower, to fulfill what? To fulfill the commitment they have made before entering in the operation of what? Lending and borrowing. So under this tri-party repo, all India financial institutions, which are having a certification or a permission from RBI to participate in the financial market, all of them, they can enter in what? Secured lending and borrowing. So lending are different types. One is secured lending. Fine, secured lending means what? You are going to provide a collateral. And under that collateral, what you can use? Government security. You can use government security. Fine. So when the government securities are used for the lending and borrowing purpose, with the repurchase obligation, it is called as what? It is called as repo. RBI introduced repo, market repo 1988. Then RBI repo in what? 1992. So if you have any doubt in the mind, Let's take it in nutshell. So, US Federal Reserve, 1920. What they introduce? Repo operation. Under repo operation, you can use what? You can use government security for what purpose? Lending and borrowing purpose. With what? With obligation of what? Repurchase obligation. Fine? With repurchase obligation. Fine? RBI, in order to expand the money market in India, RBI established DFHI, and RBI has allowed DFHI to what? To allow this repo operations. But when RBI saw that in repo market under DFHI, what is happening? Cartelization is happening. Then RBI himself started what? Repo operation, RBI repo. Fine? RBI repo. Today, what you see in the newspapers, fine, that is actually RBI repo. Fine? RBI repo. But because it is very popular and the size of RBI repo is much larger than any other operations, and it is a mainstay. In fact, repo is what? Repo is a benchmark for money market operations. Fine. Repo is a benchmark of the money market operations. Fine. In fact, in the monetary policy committee, they use repo rate as a benchmark rate. Other interest rates are going to be changed according to change in what? According to change in the repo. So I hope you know that there is a MPC system in India, monetary policy committee system in India, and they fixed what? Repo. But can you tell me still what is out of the context of MPC but in the control of RBI? RBI is also part of MPC. Governor of RBI, fine, and one deputy governor who is in charge of monetary policy, he is also part of what? He is also part of monetary policy committee. So monetary policy committee fixed the interest rates, but what are still under complete control of RBI? Still two things primarily. One is CRR. It is fixed by whom? It is fixed by RBI. MPC do not have any role in that. And other is SLR. So these two are still what? Fixed by the RBI, whereas interest rates are fixed by whom? Monetary Policy Committee. Fine? Monetary Policy Committee. Now, as I said that repo operations are basically for whom? Repo operations for banking entities. But under this tri-party repo, where there is what? There is limited purpose clearing corporation, fine, or ARCL. In the India case, BSE and NSE, they play the role of what? Limited purpose clearing corporation. What is the purpose of LPCC? They will instruct both parties to accept the conditions which they have agreed and have to what? Fulfill their promise which they made at the time of lending and borrowing. Fine. So this is the purpose of LPCC. So in this way, the tri-party repo have allowed all financial institutions registered with the RBI, they can go for what? They can go for secured lending and borrowing. Secured lending will always allow borrower to get the loan or advance at lower interest rate. And it is also beneficial for the lender because it provides some sort of what? Security. So more and more usage of repo, tri-party repo allows lowering down the interest rate, decreasing the risk, and most importantly, if the interest rates are decreased, then the companies who want to participate in the India for manufacturing purpose, or they want to expand their business, they can get the money from the market at lower interest rate, and it will facilitate more and more crowding in. More and more investors will come to India, and more producers will come to India, because interest rates will be low, then their profitability generally will be increase. So this is how this tri-party repo works, and how it is going to help the market to increase the liquidity availability. Understood? So I hope you have understood the repo, detailed repo way, how it works, what is the things. Fine. And as I always mention, if you want to know any concept in detail, fine, you can just post a comment. I'll make a video for you, and it will help you to understand the economy in the broader way. Okay?